everyone again. I'm your host, Talisa. And of course, this is the Gleaner Premium webinar exploring your best financial decision for real estate, exploring your options. So we have two amazing speakers. We have Miss Petal James, the Chief of Branches at JN Bank, who will speak on financial decisions to keep in mind when investing in real estate and exploring how to venture into real estate with limited funds. We also have Mr. Dwayne Berbick, who is with us, the Manager of Corporate and Public Affairs at the National Housing Trust, who will speak on moving towards buying a house or home in the present real estate market. We are excited to begin, and our first speaker is Miss Petal James. Now, she is a professional banker with more than 20 years in the industry. Ms. James joined the JN family in 2016 as a manager of mortgage sales. Following the transformation of the Jamaica National Building Society to the Jamaica National Group in 2017, Ms. James was promoted to the head of mortgage sales of the newly established JN Bank. She will respond to the burning question, can I invest in real estate with limited funds? And she will also discuss the best financial decision to keep in mind when investing in real estate. Ms. James?
Thank you, Talisa. I want to thank the Gleaner for this opportunity. And we want to welcome everyone here, our panelists who are here. Dwayne, thanks for being here as well. All right, so we know it's 2022, and despite the challenges for the past 2 years under a global pandemic that has hurt us, our local sectors, there are two sectors that have remained resilient. And of course, that's one, the remittance industry, and of course, the real estate industry. So two main industries, that's the remittance industry and the real estate industry, of course. The real estate is always in the mix, you know? All right, so in Jamaica, real estate prices have continued to climb, and the expansion of the sector remained constant over the period of the past 22 months, despite COVID-19, as new housing developments emerged, right? Coupled with low mortgage interest rates, albeit our central bank have increased prices on deposit rates, which invariably will affect lending rates, but the financial institution market has maintained a low interest rate market right now on lending rates. Yeah. However, not to say that you can't purchase anything else, but for one, what we have noticed is that the apartment sales went up by 30% in 2021 when compared to the similar period in 2020. That's what we noted by one of our news outlets. Yeah. And so therefore, as we settle into 2022, many people are looking closely at the real estate sector, whether as first-time homeowners or investors. However, although some of the barriers to investment in real estate have been reduced, investing in the sector is still a very significant venture, which takes a lot of preparation on the part of the investor, and that's why we're here. And so there are ways to invest directly by buying real estate funds with only a few dollars, depending on investment houses offer. However, if you're planning to invest directly in the market through the purchase of land or building or any form of property, you must be prepared for it. And so, you know, where do we begin? And the question is, if you should, you know, if you could purchase with little or no funds. Little is very relative. And although we have different mortgage options in the market, 100% financing, I know NHD will speak about that. JN Bank have 100%. Most of the institutions have 100% financing. However, you must have a little money in savings to take care of closing costs. You have to. And although we give you 100% financing, where we can finance the entire purchase price and we can give you a cashback, you must have that deposit, that 5% or 10% or even 15% deposit that the vendor will ask for. So, and the next segment that I'll be speaking to you on with the financial decisions will take into consideration the kind of savings and planning that you need to ensure that you do, to prepare for investing or purchasing in a property. So while mortgage options out there will enable you to come up with little or no funds at the start of purchasing, because of the nature of the investment, you must have something in pocket or coming out of pocket to take care of legal costs. And I'll go a little bit into that. The vendor's attorney will need to also share with you some costs. The government stamp duty and registration cost is important. And of course, as I said to you before, depositing on a property is needed before you even start the conversation of even signing a sale agreement. And so, although we will give you 100% financing and 95% financing, those initial costs will be needed to start the conversation. You have some investors who are flipping a property in the market, and so you may be looking to buy another property while you're selling one. And so you're offsetting the cost of using, the selling of one property to take care of the other. And through a letter of undertaking through your attorney, that can also help. Jane Bank offers a balloon payment option where the proceeds of the sale that you're doing, is now used to pay down at some point in time that loan that you'd have taken, and that's called a balloon payment option. So that's kind of helping you to manage your disposable income and manage your costs upfront, even though you're selling, and you're now buying another one, right? So that's really, in a nutshell, the little or no money that you can come up with to start your investment. So let us go into, what do you need? Financial advice. You need to start investing. Now, a lot of persons, when they are going to purchase, they think that you're just going to make a down payment and you just start the process. No, a lot of purchasing or investing in real estate takes a lot of planning. And I want to speak to our younger audience today that planning ahead is very important. And some persons think that, having a home too early is not important. No, in fact, having your home as early as possible is very important, because the younger you are investing, the better it is for you, because you get a longer term, on your mortgage. And so the first thing I want to point out, reducing your debt is very important. Some persons think that going into buying a home, with all the loans that you have is not good. You want to ensure that you can qualify for as much as possible when you're seeking to invest. So reducing your debts, especially high interest paying debts. Perhaps if you have a credit card, you have 2 or 3, you want to perhaps close off 2, because the less debts you have, the better it is for you to manage your cash flow going into purchasing this property. You must do a budget. You must do a budget. A budget is very important. You want to ensure that your disposable income can take care of your first mortgage payment. And of course, when you're buying a property, you want to think about also perhaps furniture. You want to think about, how you want the place to be tastefully decorated. And so you want to ensure that you're on a budget and you stick on that budget to ensure that your purchase comes through to fruition, right? And I can't stress it anymore. Save, save, save. The more you pay down on the property, the better it is for you, the less your loan amount, and so saving ahead is just like if you want to go and invest in your tuition, you want to go back to school, you'd have to plan ahead, and so buying a property tomorrow doesn't take you today to make a decision. You'd have to be planning from perhaps last year, and so that takes you into where you want to purchase, what taste of property you want to purchase. Do you want to purchase into an apartment or a fixer-upper? So saving ahead helps you with your closing costs and also your attorney's fees, your registration fees, your deposit on the property. The other financial decision that you want to consider is that you must get pre-qualified. That's a very, in fact, this is the most important step to start investing. A lot of persons, like I said to you earlier, a lot of persons just get up and believe, you know, you can just go and pay on a property. No, you want to walk into your financial institution and you want to ensure that what your salary or what you're earning can take you through with your entire financial obligations, not just buying, but you want to also live comfortably, right? So getting pre-approved, and what does this entail? You go into your institution, they'll normally ask you for your income information, whether it's your pay slip, if you're self-employed, your file tax returns, your 2 years of financial statements or compilation or audited or unaudited. You also want to ensure that your credit reports from our 2 credit bureaus are intact. And so the institution may ask you for authority to pull your credit report. And so when we generate that credit report, we want to ensure that your credit report is clean. And so a part of the planning also is you want to ensure if you have any bad debts or you're struggling to pay any debts, you want to clean those up. You want to ensure that you're paying your debts on time, and so that your credit report speaks volumes when you come in to do your pre-approval. And so using a threshold, each institution has their own threshold of a total debt servicing ratio. You want to ensure that you're qualified for whatever your salary can take, any additional loans your salary can take. Of course, the NHT, in collaboration with the NHT under the joint financing program. And so we want to ensure that you use your NHT benefits with your purchase, especially our first-time homeowners. And so up to your 6.5 million, we will also pre-qualify you for in that pre-approval letter. So getting pre-approved is very important, because if you're not pre-approved, the realtor or the vendor will not start any conversation with you. In fact, the pre-approval letter, it's your ticket to start even conversing with the realtor or the vendor. So getting pre-approved is very, very important. You want to also think about what you want to purchase. Do you want to purchase a new brand constructed house, you know, probably in a townhouse or a gated community, or you want to purchase a fixer-upper? Some persons want to, you know, to style the place how they want it. And so that kind of cost is important. Do you want to buy something new, or you want to fix up something? Do you want to do investment purposes? Do you want to do Airbnb or long-term investments, rental, or you want to do owner occupancy? So other financial considerations are important. If it's a brand new property, is it a fixer-upper? Do you want to do investment, or you want to, you know, to have your owner occupied property? And this speaks to move-in ready. So a brand new constructed property will take care of any extra fixing up that you'll do. And so this is also cost effective for you. You spend less on repairs when you purchase a brand new home. You have less maintenance and you have better amenities. Yeah. Some of the cons, additional upfront costs. Perhaps it's a smaller lot size because you're now buying into a shared space, into a strata. And you may want to purchase, purchase may require greater agility. You have to move faster, because right now the market is moving at a very agile pace, and a lot of buyers are going after the same hood. And so you want to ensure that you're in a position to move quickly, you know, into ensuring that your letter of commitment is ready and your letter of undertaking from your institution. So those are the pros and cons into buying a new home, right? For your fixer-upper, the pros, more house for your money, of course. And you have long-term projects where you can, over time, you can fix up to your liking. Those are the pros. The cons, there are outdated fixtures and features that you have to upgrade, and that will take into consideration some costs. You have some visible repairs and long-term construction to consider, and it's more of a long-term investment. A lot of persons do fixer-upper. You're living in one section of it, and you're also renting the other section of it. That's more additional income for you. So that is something that you also want to consider when you're doing a fixer-upper. Yeah. Construction. Some persons believe that construction is long gone. No. Just a few persons in the market do construction. It is also viewed as if you're buying somewhere brand new. And so JM Bank offers you up to 100% financing for construction. And so the pros for this is that you have the opportunity to customize the property how you want it, not what someone has designed. You want something, you can construct it to your liking. And there's some newness to it. This will be your first property, the first owner, perhaps on this piece of land, right? Some of the cons, you have a longer wait time, and so you also have hidden costs. You have construction costs that goes up perhaps every day, and so sometimes you have overruns. So you have to watch that with your quantity surveyor when you're going through your construction period. Yeah. Location is very important. You want to ensure that you choose a location suited for your family, perhaps your children, where your children go to school, where you work. What about traveling costs? You work in Kingston, but you're buying somewhere perhaps in Old Harbour. Yeah, you have to now factor costs, traveling costs, perhaps toll costs, gas, wear and tear on your vehicle. Those things you have to consider. Do you like pets? If you like pets, you know, you can't buy into a gated community or a strata, because a lot of the strata terms and conditions that you can't have pets. You know, you can't have your birds, you can't have your cat, you can't have your, and so you have to now look at your location as per your liking and the distance and how, you know, you remote to and from work or school, etc. Yeah. Investment purchase versus owner occupancy. Who will you be renting to? Will you be going on the short-term market or the long-term market? We do know that COVID-19 affected the short-term rental market for some time. You know, persons traveling from overseas, you know, perhaps had to be canceling because of COVID-19 protocols. Probably they couldn't meet. The borders were closed for a period of time. You know, so when you're purchasing for investment property, you want to ensure that your present income can cover the payment of your loan, because eventualities and uncertainties like COVID-19 may affect your income stream to be able for you to pay for your mortgage. And so less reliance on this investment income to pay your mortgage, the better it is for you. So you have to now look at what is happening now in the market, what is happening with COVID-19, how it can affect you with your income from the rental property, right? Or will you be living in the property? That's also something that you want to consider as well, right? And choosing the right mortgage provider is very important. Up to 100% financing, I do know most of the players in the market, they're going for now. Of course, right now, Jamaica Bank is offering as low as a 6.5%. We are also offering as low as a 5% mortgage now for owner occupancy. Those are conditions that will apply for that. And so you want to ensure that your mortgage provider is being, you know, very transparent with you with the closing costs, processing fees, your mortgage guarantee premium is you know, cost, legal fees. Some persons don't understand that buying a property involves 3 attorneys. It involves a vendor's attorney that you must share costs with. It involves the bank's attorney that must prepare the legal documents for you to sign, and also your attorney that some investors sometimes overlook. Having your own attorney is very important, very, very important, because this attorney will push back for you, albeit some of the costs are a little bit high, but it's very important for you to invest in having your own attorney. And when I say own attorney, I don't mean sharing the attorney with the vendor's attorney, no. You want to ensure that the attorney that you're using or you have retained is acting in your best interest. That's very, very important. So choosing the right mortgage provider is very, very important. And that's it from me. You can reach me at petalj@janegroup.com. I'm on the World Wide Web. For more information, my number is 878-4743. Thank you.
Thank you so much, Ms. James. I know I was going to learn a lot from you, and I made a lot of notes. So I will be visiting you at Jamaica Bank very soon. Right? That's the intention, you know. So, you know, I made some notes.
Thank you.
It's very interesting to me that the real estate market has been climbing despite COVID. That just took me off, you know, that was a perfect way to start your presentation, because it was a shocker for me. I did note, however, that you made mention that it had affected short-term rentals in terms of the short-term rental market.
Yes, yes.
I did notice that. It's very interesting that apartment sales went up by 30% in 2020.
30%.
Is there a safe average minimum income that makes a home or a land ownership more feasible to start with Jane Bank?
I wouldn't say a safe income, because most times, Talisa, is not what you're earning now. It's always what you have on your debts plate and also your savings. So someone could be earning $98,000 per month, and you'd be surprised what they can purchase. They can start to, and Dwayne will tell you, they can start with buying a piece of land and start block by block. You know, I mean, $90,000 can give you, we have teachers, we have nurses with a small income coming in and buying a taxi operator, buying their properties, albeit it might not be their dream home. And we always tell investors or persons who are buying, your first home is never normally your dream home. It's just a start. Because the day you buy that property, the day you get that key in your hand, the property goes up within a year or a couple, or because of the nature of the investment. Yeah. So I wouldn't start with the minimum number, income. What I want to encourage persons to ensure that you have little or no debts and your savings is up.
All right. Well, we just started a new year, so I know a lot of persons have it on their to-do list to get rid of their debt.
Certainly.
Right. Before I have a lot of questions, but before I get into a lot of questions, let me just add again that I do want to remind those watching of a suggestion that you made to have a deposit up front, to deposit the vendor, because there may be costs that we have to offset. For example, costs for legal fees, stamp duties, registration fees.
Yeah, valuation costs, surveyors costs. But although the institution gives you 100% financing, it does not negate you making a down payment. A down payment is a must. So you want to ensure you have your down payment, even though we'll be offering you 100% financing, and so that down payment can come back to you in a cashback. So say you paid $500,000 for deposit. I can give you the 100%, and so that $500,000 that you paid upfront to the vendor, it will come back to you from the loan amount in a cashback. And so it's important to always ensure that you're saving, because you must have your deposit and you must at least have your stamp and registration and your attorney's costs. Even the vendors have costs, very important. You can't start without those costs, right? Nice. So that's why the savings. But you can get back those costs in your hand from the cashback that will give you that 100% financing from the bank.
Our first question is, what determines if you get a rate for as low as 6.5%? versus a higher rate?
Our interest rates are tied to our processing fee. And that's the matrix that we use. Some institutions use risk rating. Our risk rating is tied to your credit rating, right? And so how much we lend you. But our interest rate is tied to what processing fees you're prepared to pay. So right now we have a high interest rate of 8.5, but a 0% processing fee. Yeah, so we have about 4 or 5 options. You can come in and talk to us to choose which one of the interest rate options you want to start off with. So we have a 6.5 as low as, but we have a 8.5 as well as high as, with a 0% processing fee. So right now we have a low or no interest rate promotion going on right now, right? What qualifies you for 100% financing? If you're with Jane Bank for more than 5 years or more. So once you've been a member of Jane Bank for 5 years or more, you can get your 100% financing. Other than that, is 97% or 95%.
Okay, I hope that answers your question. I have another question here. If the short-term rentals have dropped, would it be wise to mortgage now for the purpose of renting?
It is something that you can still look at, because although the short-term rental had dropped, and that was last year, but if you realize the posture of the government, we're opening the borders. We have open borders. The borders have been open across the world, right? And so tourism is and there's a lull now, but we're still having it. Some persons can't afford the all-inclusive. So yes, it is a good time for you to purchase for investment, but just ensure that when you're purchasing for investment, your current salary that you have, income, is good for the loan payment. So don't solely depend on the income from the rental to pay your mortgage. That's where you can go into problems. Yeah. So you want to ensure that your current salary can take care of your money. So if you get no rental, your mortgage is still paid. Yeah.
Okay.
So it's always good to, it's always good. And then you can try long term. You can try 6 months lease. You know, that way you're sure that you're getting every month, you're getting your income. But it's always good to either do short term or long term. But yes, because we see where COVID-19 is not going, but the borders are opening, or the borders have opened.
Okay, there's another question.
What are typically the prepayment options available? That is, how much of the loan can we pay off each year?
I'm not so sure exactly what percentage, but at JN, after a year have passed, you can start paying off your loan, which I know is it's easier for you because the interest cost to you now becomes less and less, right? But I'm not quite sure how much of the percentage. You can contact me after and I can follow up, with that answer. But after a year has passed, you can start making your lump sums to pay off your loan. Yes.
We're gonna position all the other questions to our Q&A section.
Okay.
There seems to be a whole lot of questions coming in. So that just shows you, Ms. James, that you did a wonderful job in presenting.
Thank you.
So much. All right, so we have our next speaker, an experience-driven communicator, Mr. Dwayne Berbick, has a solid grasp on the media and corporate communication landscape in Jamaica. He joined the NHT in 2013 and served as the Trust Corporate and Public Affairs Manager. As a Corporate and Public Affairs Manager, he has responsibility for the company's communication strategy, digital marketing, and stakeholder and media relations. Mr. Berbick will discuss moving towards buying a home or house in the present real estate market. Mr. Berbick, the floor is yours.
Thank you very much, Talisa, and I must say credit to Gleaner for creating this forum for us to have this very important discussion. Hi, Petal. It's always great being on a panel with Petal. It's always great being on a panel with Petal because I could really just, especially speaking after her, because I could really just say ditto.
I always set the tone for you.
Thank you very much. And my presentation could really just wrap up with me just saying ditto to everything Petal said. But I'll try to add some new perspectives, bring in the NHT's perspective, and pretty much to take a look in an even more broader sense as to what government is doing as it relates to real estate in Jamaica, what's happening in the housing market, some of the trends, and of course, how to assist your viewers in positioning themselves to ensure that they can take advantage of the opportunities that exist in real estate today. So I'll start off the presentation by saying, really and truly, we're in a dynamic ecosystem where housing is concerned, particularly the cost of housing vis-a-vis the affordability of individuals to be able to purchase housing. And it has created a particular kind of challenge where it feels somewhat that, it's a cat and mouse game where and Petal would have spoken about some of the positives that have taken place in the market as it relates to lower interest rates. If we were having this discussion probably 10 years ago, we were talking about interest rates as high as 19, 20 odd percent. But we're having this conversation in 2022 where we can talk about interest rates as low as 6.5% Petal at JN. And of course, at the NHT rates ranging from as low as 0% to a high of 4%. So there are some positives that have been happening in the market, and I don't want us to lose sight of them. Also on the positive sides are some of the changes as it relates to policy that have taken place by the government as it relates to particularly reduction in stamp duty and transfer tax, which is very, very important because what we found is that majority of the individuals who wish to purchase homes, the challenge many of them have is coming up with those initial fees, those initial fees that are not even related to the NHT or JN or anything, any other mortgage institution, but rather just fees that come with being able to afford property in Jamaica. So government would have taken a particular position as it relates to reducing those stamp duty fees, reducing those transfer tax fees, which have really paved the way for more individuals who would have ordinarily faced a challenge in terms of coming up with some of those upfront costs to make the purchase are now in a better position to be able to take advantage of some of the opportunities that exist. The general point I want to make, though, is that purchasing real estate requires planning. I always say it's not buying groceries. It's not walking into the supermarket and pointing and go, I like that one. I like that one. I want the one with the pool. I want the one with the multi-story one. I want the one with a gated community. All of that has implications, you know. And when you have a plan, and not just a plan, but a realistic plan as to a particular time frame that you're going to achieve that, it makes a big difference. Many of us, you know, we want to walk in and just go walk into the institution and walk out with a set of keys. It's an involved process. So you're not going to get that. Sorry to be the bearer of bad news. It's not going to happen like that. So it requires planning on your part, and it requires, as I said, a realistic plan, and requires you to stick to that plan. And that plan is going to vary from individual to individual. For some persons, they can do it in a year. They can do it in 6 months. Others, it's going to take a little bit more time than that. You're going to need to take on some of that kind of advice that Petal has given you as it relates to, you know, spending a year or two and just clearing up your debts, as an example. Spending another year and two and doing some aggressive saving before you even enter into the market. But remember, you must come to the table with a plan. And of course, the sooner you do it, the better, because a mortgage is calculated, you know, based off time, you know, and age is a big factor as it relates to calculating your mortgage, and really and truly impacts how much you pay on a monthly basis. So the individual who is making a purchase at age 30, in the case of the NHT, has up until age 70, 40 years to repay that loan. So what you find is that over a longer time period, you can stretch out those mortgage payments a little bit more so they become smaller, more manageable. And part of the challenge we at the NHT here we have is that we find many of our mortgages are coming to us at closer to age 50. And then what you're going to find is that when we do the calculations for those monthly mortgage payments, they're pretty high, even with a 0% interest rate loan. So we have done some work as it relates to going into our universities and colleges, talking to our young professionals a little bit more. And Petal will agree with me that we are seeing that average age for mortgages moving from the high 40s closer. I think we're probably even averaging out in the 30s now, which is very good. It means, therefore, that persons are listening to the message, one, which is very important, acting on the message, even more important, but also they're in a position now to make better financial investments where real estate is concerned. One of the things Petal mentioned, of course, your first home should not be your only home, but that can only happen if you enter into the market soon enough that you're able to, you know, leverage the efficiencies that are there, you know, make the wise financial decisions that you need to make, and be able to move on to your second, third, or even fourth purchase. I mean, who to tell? There's no limit on how much you can actually purchase where real estate is concerned. A big thing I also want to touch on is that of being realistic as to asking yourself the question of where you can afford to live. And it's a tough question. It's an uncomfortable question because we have particular ambitions, we have particular appetites. We want the multi-story unit with a 3-4 bedroom with 3-4 matching bathrooms, the ensuite, all of that, and nothing wrong with that. People say have nice things, you know, big house, nice house. I want that for you, trust me. But sometimes when you're coming into the market, we're not at the 3, 4, 5 bedroom just yet. And I find that some persons, when they step in and they realize that, okay, I've done my affordability check, I realize where I'm at, and I perhaps don't like what I'm seeing. You find that many persons take a step back. And that's not always a good thing, because when you take a step back, it means that when you come back to the market sometime later, the dynamics have changed. And many persons believe that, okay, I can save, and save towards that nice big house that I want to buy. My advice instead is to start where you can afford. If it is the 1 bedroom, buy it. If it is a studio, buy it. Nobody says you have to keep it. Sell it back in a few years. As Petal indicated, a 30% appreciation, where apartments are concerned as it relates to the cost of them. So you can always sell that back and buy something else as your circumstances change, as you perhaps change jobs and more funds become available. It's a journey. It's not a destination that you get to in one go, but home ownership is really a journey. So you start with where you can afford, and as your circumstances change, you make those changes as it relates to your property going forward. Petal touched on the need to save that deposit, that 20% for not just deposit, but the general fees, your legal fees, your valuation report, your various ID report, and all that as well. I'll point out here, though, that the NHT has a product that not many persons are trying to take advantage of, or contribution refund towards deposit. Now, I know we're in January, so refunds is a buzzword for everybody. And many persons would be collecting their 2014 refunds at this time. But what the NHT does is those refunds that are not yet due, so the one for 2015, 16, 17, 18, etc., not yet due for refund. If you're purchasing a house today, the NHT makes those contributions available to you ahead of time. So it can assist in terms of offsetting some of those costs, some of those fees that are associated with the purchase. So, as I said, collect that refund if you want, but if you have any plan to purchase a home, I would say let it stay there. And when you're ready to make that purchase, come in and access our contribution refund towards deposit facility. The NHT will make up to 6 years of the 7 years of contributions that we hold for you available ahead of time to help offset some of those costs. Which brings me to my next point, which is the importance of doing research. A mortgage is personal. Of course, it will vary from individual to individual. And I find that many times some persons will say, I go down to NHT and they said, I can't get this. And somebody else uses that as their own experience. And the truth is, you can't. Everything will vary from individual to individual. Your interest rate is based off you. Your loan tenure, which is how long you get to repay your mortgage, is also personal. It's based off your individual circumstances. And at the NHT has what we call several enablers. We have our parent assist program. When it comes to our schemes, we have 100% financing, of course. We also have deferred mortgage programs, several programs that exist. So you have to ensure that you do the research. And doing the research means sitting down and having that conversation with the right persons. Have that conversation with the NHT. Have it with your realtor. Have it with your mortgage provider. And what you may sometimes find is that you're closer to home ownership than you think. So don't take somebody else's experience of, oh, I wasn't able to get a mortgage because of XYZ, and you think that, oh, because you and this person are, probably appear close in terms of circumstances, that the same is going to be your reality. No, do your own research and see where you stand and create your own pathway towards your own home ownership goal. So shop around as it relates to the mortgage institutions, see what the different offerings are, see what the different interest rates are. And of course, shop around as it relates to housing as well. You may think that, okay, I need to live in this particular location, but this location carries a price tag, say 20 million. You may find that, okay, if I move a couple kilometers or out of this geographic location, I may find that I'm able to get a better bang for my buck. The reality too is that everybody wants to live in Kingston, and I understand. It's the hub. It's where most of the business and entertainment activity takes place. So a lot of persons want to live close to that. But you will find that living in the capital carries a particular kind of price tag. So you'll find real estate, what you would probably pay, what $20 million will get you in Kingston, is not what 20 million will get you in a St. Catherine. So you have to do that kind of shop around to see where you're going to get the best deal for your money. And that's not unique to Jamaica. If you look the world over, you'll find that, living in the capital, it's expensive. It is. But if you perhaps you're willing to take that extra 20-minute commute, that extra 30-minute commute, you realize that you're able to find a better deal as it relates to what you can get for your financial investment. And coupled with that is the improvements that we're seeing as it relates to road infrastructure in Jamaica. And that has really made some areas, some communities that were perhaps deemed, too far. I can't live there. With the improvements that we're seeing as it relates to the highways, St. Thomas is looking like the new frontier as it relates to the planned infrastructure development as it relates to roads out there. So you want to do that kind of thinking and have that kind of assessment as you look in the housing market as well, to see where you can get the best deal as it relates to your real estate purchase. If you're borrowing in excess of the NHD amount, the NHD's loan limit maximum is $6.5 million for open market purchases. The NHD has 100% financing of the $15 million for NHD scheme developments. But if you're borrowing beyond that 6.5, you can always pool that with additional amounts from your other mortgage institution. Petal would have mentioned our joint finance mortgage program earlier. And the great thing about that is that it takes the hassle out of it for the mortgager. So you don't have to come into the NHD and borrow the 6.5 at NHD and run over to Petal and say, hey, Petal, I want an additional 10 million or so. No, just go to Petal and say, hey, Petal, I want to buy this property. It costs $15 million, costs $20 million, and I'm using my NHD benefit as well. And we will work out how that goes. So you don't have to visit both institutions for processing. We communicate, we have a very great relationship. So we will communicate with each other. I believe the service standard is within 1 day, we're able to tell Petal that, hey, you're qualified for this. This is what you're entitled to. You can go ahead and start the processing. And it's a similar arrangement when it comes to repayment as well, that you don't have to pay a portion at NHT and a portion at the other institution. You make one payment to the institution, and again, we work out on the back end who gets what. So that's one of the advantages as it relates to pooling funds where we're making the purchase is concerned. And my final point I think I want to touch on is to engage professionals when you are making your purchase. I can't stress it enough. Engage professionals. We've seen many transactions go bad because the right professional was not engaged. And that is related to all aspects of the transaction. You want to start with a great attorney, an attorney who is not just an attorney, but get an attorney that has legal conveyancing experience, who's going to be able to spot, some of the things that perhaps a regular attorney would not be able to spot. That's going to take your transaction through the process in good time. And in good time, that's very important because generally you're going to have what we call a sale agreement, which says the transaction must be completed within either 60, 90, or 120 days, as the case may be. And when you go over that time as a prospective buyer, there are cost implications for that. So you want to have an attorney that's going to manage that for you, ensure that the transaction keeps moving, that is completed within time, and it comes at no additional cost to you, the future homeowner. So engage a professional attorney, professional valuator, surveyor, when it comes to getting your surveyor's ID report. And of course, for all of those services generally associated with the purchase, just ensure that you spend some time to investigate and choose wisely and get professional help in making that purchase. I think those are the main points, Talisa, I want to touch on. And of course, anything else I think can come out in our Q&A.
I'm telling you, I'm learning so much, and I absolutely love the presentations. Both you and Miss James are just so engaging. And I literally have gone back to school. I have a notebook right here in front of me. And then I started to type because I got tired of writing. So it was so good. I absolutely loved it. To the attendees who are here, we have set a poll question that we'd love for you to answer. Tell us by selecting the most appropriate answer if you have been or plan to engage in the real estate market. I'd love to hear from both you, Ms. James, and of course, Mr. Berbick. What direction is the housing market taking for 2022? What are the predictions for the market?
The market is in a boom right now. It continues to be in a boom despite COVID-19. We're not sure where the variants are going to take us, but it does not affect the market right now. The price points remain high and climbing because of so many persons going after the same good. You know how supply and demand is right now. So the bag is really in the hands of the seller. So it is really on a boom right now. And so what we try to encourage persons to do, if you want to invest and you're in the right space financially, planning phase, go ahead, don't wait. Because the moment you wait, the price move on you drastically. Something that comes up perhaps for, it's a good investment, 20 million, 15 million. By the time you look, it moves. If you let it stay for too long, it moves. So it's always a good time to buy, because when you buy today, tomorrow, it appreciates in value.
The demand is pretty strong for real estate. We all thought with COVID, the market would become a little bit soft. And I know some persons were holding and waiting to see, prices decrease with a hope that they'll be able to get a better deal, but just not happening. It's just not happening. And it's not happening because despite all the construction activity that you see in and around Kingston and St. Andrew, and perhaps, well, it's not just a Kingston and St. Andrew thing. Across the length and breadth of Jamaica, I'm sure you see all that construction activity taking place. But despite all of that, we're still not where we need to be as it relates to meeting the demand for housing in Jamaica. So it's still pretty much a seller's market. So individuals who perhaps are waiting to say, okay, I think prices are going to fall. I get the question all the time that, we're in a bubble. When do you think the bubble is going to burst? So I'm like, I think this bubble is pretty solid. It's pretty strong. I don't see much changing, especially as it relates to 2022. I think prices are going to hold. What I think will happen is that some new areas I think are going to pop up as it relates to real estate that perhaps decentralize some of the busyness and the expectancy and the anxiety that's taking place in Kingston and St. Andrew. And I think persons should position themselves to take a look at some of these opportunities that exist outside of the capital, wherever they may be, and jump on that. I think that's as good as it will get as it relates to lower prices.
Awesome. I want to share some of the things that I learned from your presentation before I go into my findings from the poll. I learned that planning is key. It is essential. So I need to put all of my notes into use after today, right? Because planning is key. It is an involved process, right? I understand that purchasing a home is an involved process and that it requires realistic planning, right? So this is something that I got from your presentation, Mr. Berbick. I also learned that now is better, right? And that the earlier, the better, and that I should start where I can afford. Did I get that right?
You very much did. You would get an A+ for me.
So my findings from the poll shows that 90% of the persons that are in this conversation now are saying that they're interested in engaging in real estate in the next 2 to 3 years. And only 30% say that they've tried. But I'm going to be the first to ask a question that was submitted by a Gleaner Premium subscriber. The question is, I live in Montego Bay. Can I own a scheme house in Westmoreland or even St. Thomas when I apply through NHT?
Generally, when the NHT puts a development on the market, there is generally a description as to, within a particular radius, persons who are eligible to put in an application. So in St. James, sometimes you maybe just St. James, or sometimes you may extend that to neighboring parishes such as Trelawney or even Westmoreland. Again, it will vary from development to development, and that's generally based off the number of units. So the NHT does every 3 to 5 years a housing demand survey that pretty much tells us what's happening as it relates to the interest of individuals in every parish in Jamaica. What are persons' housing plans for the 5-year period, what they can afford, all of that. So generally, when the NHT puts a development on the market, we are able to say, okay, we have 100 units in St. James, where we know we're able to find that, demand here in St. James, so we need not extend it to another parish. I know sometimes persons are looking to extend themselves beyond their current location for whatever reasons. But generally, the NHT's housing policy is that, we have put a development in a parish, it's for individuals in that parish. And I'm happy to say, though, that, we have developments in every parish. I think we're just short of St. Thomas and Portland at the moment, just over 12,000 housing solutions we have in the ground right now. So I know sometimes persons may say, okay, what's happening with my parish? When are you coming to me? Construction is a cycle, so you'll soon see something in your parish that you'll be able to put in your application for.
Okay, Mr. Berbick, on that note, can you tell me a little bit about the guaranteed purchase program by the NHT?
Sure, I'll happily tell you. So the guaranteed purchase program is one of the initiatives, one of the measures that the NHT has put in place to see how quickly we can bring a large number of housing solutions to the market. And it really is an arrangement between the NHT and private developers, where private developers do construction because they're good at that. That's what they do. They don't have some of the challenges that the NHT has of going through a long procurement cycle that makes the construction cycle very, very long. So a private developer can jump in, start construction, and be completed in a very quicker time than the NHT can. On the other hand, though, that same private developer, upon completion of these units, some of them, they don't have they aren't marketing savvy. So they'll build the units, they'll have them there, they'll sell 10 the first month, and they're not sure when they're going to sell the rest. The NHT, however, has a very, very ready market. So it's leveraging both efficiencies that exist in the housing market. Developers who are able to build fast and build in large volumes, and the NHT that has, of course, a ready market and has the financing arrangements that individuals can access that's going to allow them to make that purchase. So in a nutshell, that's the guaranteed purchase program. Developers build, NHT buys the units from these developers, and the NHT makes the units available to our contributors using the NHT's financial arrangements.
Thank you so much, Mr. Berbick. I have one more submitted question for you before we go to our questions that are being submitted here. The question is there a way to track which parishes have comparable property price points? And this is for both panelists.
It's a little bit challenging. Why? Because every house is unique in its own. A 2-bedroom in Manchester is not the same as a 2-bedroom in
In Kingston.
It's not the same
Yeah.
as a 2-bedroom in Kingston. So it's a little bit difficult to track. I think the best tool we have, and Petal probably can back me up there, is the MLS, the multiple listing.
I was just about to say the MLS
right.
listing. Yeah, that's it. That's
Where
your
a prospective
realtor
buyer can
yeah.
go in.
Yeah.
A prospective buyer can go in and plug in, you know, their different variables, probably what's their sweet spot as it relates to price, and it will be able to tell them where across Jamaica they can find housing units within that price range. I think that's perhaps the best bet, and that's available on most of our real estate pages. But you can go ahead, Petal, and add to that.
Right. I was just about to say, when you would have been pre-approved by JN, what we do is partner with a realtor for you to help you with your search. Sometimes the searching period for you to find a property can be very frustrating. So we take the frustration out of your search. So what we do, we align you with a realtor or a developer to help you with your search. And so once you have your pre-approval letter, the realtor or the developer will now add you to that MLS listing, and they will now start sending you emails of potential properties out there that are on the market for you to choose from based on your liking or your taste and the price point that you would have been pre-approved for. And from that, you could see the taste of the property, because pictures are there, how many bedrooms, how many bathrooms, the amenities, the area. And from that, you can know, oh, this is a good investment, you know, or this doesn't suit me. So the MLS listing is one way that you can, and you can, you know, gain more information, you know, how to buy, basically on the market.
Thank you so much. Very, very insightful. We're now going to throw to our Q&As from our viewers here. Nayokia, can you let me know the first question?
If you delay collecting NHT's refund, do you get more for previous years? That is, does the interest apply on uncollected funds?
The NHT makes, so an individual makes a payment as it relates to contributions in a particular year. The NHT holds them for a period of 7 years, and the NHT applies an interest rate of 2% per annum. So after 7 years, the NHT's assumption is that the individual will take that refund. So after 7 years, the individual would be eligible for a refund of that. So it's 2% per annum for a period of 7 years.
This one says, if an attorney is holding up the process, can the purchaser act on their behalf?
No, it will not be in the purchaser's attorney to hold up a process, because holding up the process could cost you as a purchaser, right? Rarely a purchaser's attorney hold up the process. Usually the vendor's attorney is who kind of, you know, taking their time. Rarely you have a purchaser attorney who holds up. It's usually the purchaser attorney who is actually chasing the process. It will not be in your best interest as a purchaser's attorney to hold up a process. No, because your sale agreement has a timeline. The moment you sign that sale agreement and it is dated, on the first part of your sale agreement, there's a particular date that said that this agreement has been agreed. Now, there are some timelines in your sale agreement. You have the timeline for the commitment letter, and you also have a timeline for the entire sale to be completed. Now, in that timeline, it could be up to about 120 days maximum. Sometimes some attorneys agree to a 90-day or so, right? Now, that 120 days timeline also includes the government's process to stamp and also caveat search, which the National Agency and the Stamp Office does, and the registration of the mortgage. So everything must be done in that 120 days. Now, the purchaser attorney cannot be holding up that process. Yeah, you want to minimize your holding up of that process. And so because there are timelines in that sale agreement for the commitment letter to be due, and also for the letter of undertaking to be due, most sale agreements also have an interest clause, meaning if you would have passed the time for your commitment letter date or the date to close the sale, then you now start paying interest at a particular interest. It could be 1%, 2%, whatever you would have agreed on at the start of the process or the start of the sale. So no, it will not be in your best interest as a purchaser for your attorney to be holding up, because it might not fall on you, to pay interest for this, because time is now money. Because this vendor now needs his money, and you don't need to move in quickly, so time is money.
The other question, if you're considering a new development, is there a list of best or recommended developers to buy from?
Developers, or the best developers to build to choose from are the ones who are part of the Developers Association of Jamaica, who are governed by the real estate board. Yes, so you can visit. I believe they have a website that you can visit to see, the developers who are a part of the association. I believe Mr. Andrew James is now the chairperson or the head of that association, and the real estate board, are who governs. You'd have seen some developments in the news of late, with some encroachments and some breaches. So it's always good to research before you make that down payment or you buy into any development. Yeah.
And what are the processing fees for JN generally?
Okay, our processing fee are as low as 0%, as high as 3% plus GCT, and those are conditions apply.
What are some of the stumbling blocks a member of the working class can encounter when trying to get a loan to purchase a home?
Well, I wouldn't call them stumbling blocks. It could be hurdling, there could be some things in your way. And I did mention earlier that one, you need to plan ahead. You don't want to get ahead of the game where you go and just make a down payment. Some persons are so eager, they're gonna make a down payment, have a mortgage expert hold your hand throughout the process. Don't try to get ahead of your mortgage expert or your banker. And so listen, much of the stumbling blocks that persons come upon are self-imposed, because they're eager, they want to get ahead, they want to rush ahead and to get this thing going. And there's a process. And the first step in this process, everyone, is to get pre-approved. And like Dwayne says, you want to ensure that 20 million here today is not the same 20 million yesterday or in future. And so what your income can take right now is what your income can take, although you want something else. Yeah. And so if you would have gotten pre-approved, some of the mistakes that person make, you get pre-approved today, your pre-approval letter is valid for 3 months, and you go and take out a loan. That's self-imposed. You are now causing a stumbling block for you now when you're ready to purchase. You don't have sufficient income to take care of what you're pre-approved for last month, right? And you have the ones now, the wiser ones who would have been pre-approved and pay off your loans. Hey, you would have been now pre-approved now for more when you're ready to buy again, right? So we're saying follow your mortgage advisor, your mortgage expert, listen to what, because we're in the market. We understand what is happening in the market, and don't get ahead, thinking that you understand how it works and you understand how it goes. So those are not really stumbling blocks. You want to listen to your attorney, and don't take on the same attorney, or don't retain the same attorney that is that the vendor also has retained, because you don't know when that attorney is acting in your best interest. Yeah, you don't know if they're acting in the vendor's interest. You don't know when you have the same attorney, right? And because of cost, some persons reduce. I'm trying to reduce cost by shared attorneys. Always not in your best interest. That's also penny wise and pound foolish, as the saying goes, right? So stumbling blocks. One could be where you would have paid on a property and you have not yet done a valuation report, right? And when you have done that valuation report, you're finding out that the value is not as similar to the price that you're purchasing. No one wants to buy a property and the value is less than the selling price. Yeah, you're going to be losing it, because it means that you're going to be paying more out of pocket to take care of this property. One other stumbling block is where you would have started the process and you have not done a surveyor's report yet. And by the time now you're down the road, when you look, the bank will not be financing this property because there's an encroachment. And what we do know about encroachments, they have to be fixed before we take on that security, because no bank wants to be left with an encroachment, distance away from the road, or you're onto Parish Council Road, or you're across your neighbor too much, or your neighbors across you, right? And so also restrictive covenants on your title. You want to ensure that you do your surveyor's report by a commissioned land surveyor, who would have been commissioned by the Ministry of Land, right? You'd have done your surveyor's report, and so your surveyor's report is clean, meaning that there are no encroachments and there are no restrictive covenants. If you do have restrictive covenants, some of those can be dealt with in the courts, and so the vendor's letter of undertaking would want to ensure that, you're protected. And so, who will be fixing this restrictive covenant on the title? Yeah. You also, there could be myriad doing, I don't want to take over.
No, you're doing a great job of covering them.
And your valuation report, they are very important. You have some strata complexes where the person who is selling owes on maintenance. And so you're now buying this property and maintenance is owed, right? You want to ensure that you are not taking on this owed maintenance. In fact, the bank will want to know if there's any maintenance owed and how it will be paid. So, and that's why you need your attorney to guide you in this process. Yeah. Yeah.
I'll just add two real quickly, Petal, based off what I've seen in recent months. Water bill. That's something we sometimes skip over. Ensure that the water bill is linked to the property. To ensure that water bill is paid up to date and it is clear, because you're going to, once you sign and say, I am now the owner, you've inherited that water bill, whether it's 300, 400, 500, whatever the case may be, you will inherit that. And you want to probably just have someone just check that water main, because sometimes they fill up the bill, but there's a leak.
Yeah.
But there's a leak, and month one you say, but we're not even moving good yet. Why my bill $60,000? There's a leak there that the owner did not fix, so you have to look out. There are some little things, what you may think are just some little things that can really become very frustrating. The other one I want to mention, the final one, ensure that the person you are buying from has permission to sell. Yeah. I don't think I need to add to that. People sell property they don't own, and it sometimes is not until you're down the line, unfortunately, probably have made your deposit already, and starting the process, you reach the NLA and you go, oh, but this is not the owner of the property. And then how you get your deposit back, So you want to ensure, I'll end where Petal ended, ensure you have a good attorney that's going to look out for these things and ensure that you're not being led down the wrong path.
And one last thing, Talisa and Dwayne Nayoka, we have some developers who they're building, and you have made a down payment, your loan has come through, you paid over your monies, and now you're ready to have possession. The property is not completed. Yeah. There's something called a certificate of practical completion. You want to ensure that you or your banker receives that, because usually the letter of undertaking going over to the vendor's attorney would say that we will pay on the certificate of practical completion. What I'd advise you to do as well is to go and do your own inspection, because usually there's a period of defects. The defects period of about 6 months after you would have taken possession of the property, where you can now claim under warranty of defects, and within 6 months after you have taken possession. But before those monies are paid over by the institution, I'd advise you with your attorney or with someone who is, perhaps into construction and have an eye for those things, just to go in and do a walkthrough with the developer. It's very important, because you don't want to be paying over monies and you can't move in. It's not ready. although sometimes a certificate of practical completion was submitted to the banker, right? So that's very, very important before you take possession, that you are comfortable with what you see, because when you're now moving and handing over, then that's when you'll start to see some defects, because things will happen. There's a 6 months warranty period that you have for the developer to make changes while, even though you're living there, you haven't moved in as it, or you have moved in, right? So you want to ensure that you do your own inspection before you move in with that certificate of practical completion. Yeah.
Boy, I'm really learning a lot. And I'm telling you something as simple as your water bill. Can you imagine?
Yes.
It
Yes.
can be such a nuisance if you don't take
Yes.
care of that and ensure that that is, oh, wow.
And we do know that the NWC can place a caveat against your title for water bill. Yes. Also, property tax. You want to ensure before you take over that property, the taxes for the property are paid up, because the government, the local government, can place a caveat against your property for money to be paid over for taxes owed before. So those are kind of some stumbling blocks that you have to look out for. But before the loan is submitted, what Jane Bank does is ensure that we have the most recent water bill. It is paid up. We also ask for the property tax certificate to ensure that there are no taxes owed. We also ask for a letter from the strata for any outstanding maintenance, or to show that the maintenance is up to date. So we do those kind of checks to help you to ensure that you have a smooth process.
It definitely is an involved process, as Mr. Berbick had said, and it involves realistic planning. So I'm getting that at every step, and with every response to every question, it still comes around to planning and having the right people in your corner. We have time for one more question before we close. Naoki, I understand we have one question there.
The question from Ran. He says he understands the general process associated with NHT giving back contribution towards fees. However, he believes the NHT also provides a 5% contribution fee as well. Can the difference be explained between the two programs?
I'm not sure I understand that question, but I think what you may be referring to is that 5% surcharge that exists with the joint finance mortgage program.
The legal fees, Dwayne, Right. So or any other cost that you guys normally,
Right. So Petal probably could touch on that one, since it's more on that end of open market purchases. So okay. So although the NHT qualifies you for up to 6.5 million, the NHT most if not all times approves you for an additional 5% to assist with legal costs, closing fees, buying of furniture. And we always say to the applicant, take advantage of this 5%, because it's on a very low rate. You can't get it anywhere. And for the 6.5 million eligible amount, that's 325,000. Usually it is added to your 6.5, which means that your loan will now be 6,825,000, and so it is spread across the tenure of your loan. It's always good to take it. It can be used for any purpose. Helping with your closing fees, helping with your moving in. If you want to buy something, you want to buy a couch, you want to help to buy a bed, that money comes back to you. And for the persons who are eligible for 6.5, that 325,000 is always useful. It can also help towards paying off the vendor for the balance of purchase price. So we always encourage you to take that 5%. The only caveat is that it's not paid to you, which is why I asked.
It's not paid to you.
It's paid over to the mortgage institution.
Right. Yes.
Right.
Okay. All right.
You're welcome,
Thank you so much. Thank you. I believe this is our time. We are actually just in time for our ending time. Thank you so much, Ms. James and Mr. Berbick, for your presentations. I have learned so much from this webinar, and I'm sure that our viewers will benefit greatly from the advice that you shared with us. Before we go, can you just remind us both how we stay connected with your organizations?
If you go online on the World Wide Web, janebank.com, you'll see our suite of mortgage or cohort of mortgage experts. We have 4 mortgage centers across the island. However, in over 35 branches, including our Premier on Belmont Road, you can get information about mortgages. And of course, you can email me at petalj@jamebank.com. But our mortgage experts are online from who you can choose to assist you with your mortgage. We have 4 mortgage centers across the island and 35 branches.
And we have an NHT office in every parish in Jamaica, but you can always reach us at 929-6500 or 1-888 NHT, nht.gov.jm. You can drop us a line at wecare@nht.gov.jm. And of course, we're on all socials on Twitter, the NHT, Facebook, the NHT, and on Instagram at National Housing Trust.
I can definitely see that NHT does care. Thank you so much. We have come to the end of the Gleaner Premium webinar, exploring your best financial decision for real estate, exploring your options. A special thanks to all those who participated. Now you can go ahead and share with your friends and family how great the content is so that they can subscribe to the Gleaner Premium. Have a nice day and see you guys next time.